I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone exciting, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward to what might happen in the next week. Hopefully, lots of great ideas and opportunities for you throughout the show. Well, the stock market had another mixed week this week, as investors seemed able to ignore the negative background news that came out early on that changed later in the week as the news started to come out that things in Turkey were getting worse. There seemed to be more interest in the antics of Elon Musk as he did the pump and shove it up the rump of the shorts act, and we'll have more to say about that. Friday brought stock market sellers in worldwide, and maybe the market was just ready to get a pullback. The impetus was the collapse in Turkey, the Turkish Lira down as much as 18% overnight on Friday, and then they had a modest rebound, but overall there's simply a meltdown going over there. That scared the European markets as they sold off pretty hard, and the fear is exposure to the European banks and that there will be contagion spreading around to the financial industry all over the world. So that brought fear into the markets. The media, if you read it, they're trying to blame President Trump on the sanctions that he has imposed on Turkey. Truth is that Turkey really is to blame. They have massive debt out there. They have built a huge amount of debt, and 50% or more of that is held by foreigners. That gives them a lot of external exposure. And the president saw this plunge going on, and his response was, well, we're going to double those tariffs on steel and aluminum, kind of tightening the noose around the neck of Turkey. If you want to know about the United States, well, the U.S. at one point had 47% of their debt held by foreigners, so that exposure was, well, similar to Turkey. Now it's less because the Fed bought up so much of the U.S. debt that it's in the 30-something% right now, but that's still a ton of debt out there, and someday the U.S. is going to have their comeuppance regarding all of the nonsense that their Fed has done. The focus also was on Russia as Russia, their market moved down sharply also, and that's also based on U.S. sanctions. So between sanctions and tariffs and all of the geopolitical wranglings that are going on, the market did get nervous here on Friday, but the breadth figures are not that bad. I'm going to talk more about that later on. The question is, how long will this all last? All of this stuff that's happening here in the European markets where they're moving down sharply. I want to speak to that for just a moment. Last week I showed you a chart looking at China, which was moving down pretty sharply, and saying that, well, I thought the risk was that China would be moving lower into much later in the year, maybe November. I want to show you that chart again, but I also want to show you Russia and Turkey because these are major negative influences, and how long will this last? How long will this external risk to the U.S. markets continue? You know, it is a global economy, and there's interconnectedness between all of these markets, and I think it's something that we really need to focus on. So here's that chart of China that I showed you last week, and that points to, if you have been following our cycle analysis, to a decline in the market that is likely to go way out over here out into November. So that's a negative look right there when you see that I showed last week, that big head and shoulders top and that measurement way down here at around 38 in November. That's a bad scenario. But I want to show you something else. Let's take a look at Russia, RSX. And when you look at this, you can see that, well, it had that big failure, and now that's pointing down to declines into late September or October. And you got to look at this Turkish meltdown in here that you see, TUR, that also is pointing to the downside. And look at this thing is down from 47 now, trades all the way down to 19 this week. And this points to a decline out into November also. That's our cycle analysis that you're seeing in there. Take a little closer look right in here. And this is just devastation. It just does not look like it's going to end. So with that look at the market right there in Turkey and in Russia and in China, that's really looking to us like there is a potential for some big declines to continue, and that were there to be contagion, you have to really be thinking about the risk that we have here to the United States. So that's a look at the debacle that's going on in the Turkish market, and that does not look to me like it's going away. The way that they're going to fight this off is by raising interest rates very sharply. You could expect that. Interest rates now around 17.5% in Turkey. Expect 23-25% in there as they try to stabilize the lira. But you know, it's a really a dead man's game when you do that, and we really think that that's a big issue. While investors here are acting like the U.S. markets are a safe haven, we get a day where the market sells off like today, but then buyers come into the Russell. The Russell actually moved to the plus side for the day. While that's going on, you know, the market, you know, will look okay, and certainly it's in better shape in some ways than a lot of the other countries out there. But I have a lot of doubts that it's going to be able to avoid being pulled down in the sinkhole that's being created. We may have just actually seen the top in the U.S. market for the year. Now, there are tests possible, and maybe you can make it by 0.5 or 1% higher on the year if they try to get a little better. But no, we have seen an odd occurrence. While parts of the world are collapsing, the complacency here in the U.S. is crazy. We had a VIX handle, got very close to 10 implied volatilities here in the United States, and that to me makes a point that there's some odd disparities in here that make the risks very, very high for the U.S. market. So I would say that while right now we really look like an island of safety, I would say that that's probably not the case. Take a look at what happened here in the 60-minute chart of the S&P 500, where we look at the movements throughout the week and the background news. We could see that what happened here on Monday was, well, China yuan was weak again. That pushed the market down. And then they came out and they said that they were going to stimulate investments in here. They were pretty weak about how that was going to happen. It was pretty vague. So you had a little lift there in the world markets there overnight on Tuesday. Here was Elon Musk's tweet right over here that he was planning to take it private, take Tesla private, and that saved the market. But you could see that really was the peak for the week. China came out and talked about their retaliation here of $16 billion in tariffs. When they finally came out with that list, though, it didn't have oil on it, which was interesting, and oil got a little bit of a pop on that. And here you could see what was really going on Thursday. The ruble and the lira crack on these sanctions. China does impose that $16 billion in tariffs. Here, Tesla comes apart for 5% of that ridiculous upside move. I'm going to keep pounding on how ridiculous this is, and I'll talk more about it in the best and worst for the week. And then on Friday, the Turkish Lira in here plunges 13% now. It was down about 18% overnight, and just this contagion fear knocks this market down, as you can see right there. And it tried to rally back, but now here we are with a couple hours left to go in the day, and we have the market sinking again. S&Ps are down about 20 points right now. So it's been bouncing between down 23 and down about 12 points back and forth, and certainly a lot of help being given to the market by the Russell. It's unbelievable that they come in and buy that under conditions that we see. Does it make sense that the third layer of companies, the third tier of stocks, are the safe havens? They're the ones that borrow the most amount of money, and well, maybe they are the safe havens, because interest rates look like they're going to have a hard time going up here in this country when the bonds are acting like they're a flight to safety. So stock market here in the United States, S&P 500 about unchanged on the week. NASDAQ goes up a little bit. The Russell up about 1% or a little better than that. And the Dow Jones Industrial Average fractionally lower here in this mixed market for the week. Bonds up about 1.25 points. It's certainly on this Turkey situation. 10-year yields fall about 8 basis points. And the 10 to 30 yield spread, the yield curve there, has moved out from what was threatening around 12 basis points to now being at about 15.5 basis points. So little widening there in the long end of the yield curve. Dollar up on the week in this flight to safety, about 0.8%. Gold market losing only about $2. Now, with this move up going on right now in the dollar, the gold market is starting to act a little bit better, and if you saw our future speak, we're looking for a bear market bounce, and we'll talk more about that also in the short-term view. Oil moves down about $1 on the week, but got a little bit of recovery here at the end of the week. So that is a look at the opening segment in here. I mean, if there's a bottom line to this, it's the question out there, how long can the U.S. survive what's going on out there? We're going to look a little bit more extensively at the world markets here during the week for our members, so you might want to take a look, and I think we'll do that on Thursday in our stock sectors segment coming forward, where we'll look at the country ETFs and really get a broader sense for what's going on in the world. So you probably don't want to miss that. You'll need to become a member and talk more about the specials that we have coming in just a few minutes. That's it for the opening, and I'll be right back with the best and worst stocks for the week. All right, for the best and worst stocks for the week, I do this every single week. What I do is cycle analysis. For those of you that are watching the show for the first time, essentially, I'm a unique analyst in that I look at what's called cycle analysis, which is the heartbeat of the market. It's the rhythms that exist in the market, and that is based on repeating patterns that are identifiable to the trained eye. And I have a lot of people that are learning our method of cycle analysis. It essentially comes out of a book that I read in 1975, Profit Magic of Stock Transaction Timing, and it's evolved for me over this 43 years that I've been doing cycle analysis, and that is a very, I would say, informative way to look at the markets, because it's based on price and time. And there's so few ways that you can look at the markets and analyze them that are based on timing. And you'll see me do that all the time when I look at these charts. So this is the best of the week. We're going to look at the biggest gainers, and I can't even analyze this one that's moving up fast enough because of these big gains. Here we have Triple D gaining some massive 45, 47% on the week. I can't keep track of it. It's moving up so quickly. 3D printing, you can see that right there is their business. The two that I track are Triple D and Stratasys, SSYS. They came out with some really good earnings. The valuations in here are nutty. I mean, really just out of line. And if you were to be buying something like this because it has value, well, I mean, you would never buy it. They're certainly betting on the come, and this is, we'll call this a tone change in 3D printing, or is it a toner change? As the move up here is really reflective of the fact that there is an expectation that's being spoken of in the industry of massive explosive growth in 3D printing. Now, there are a multitude of companies out there, and namely Hewlett-Packard, which are huge competition for them. But the question is, are these guys now getting into a sweet spot here? And their earnings really did well. So this is a big gain. You can see we projected it to get up here in a month based on this new projection, and I'm going to have to raise the projection again. It really looks like this thing could get over $23 when you look at this, but it might not be in this upside wave. There's a corrective process due in here, and as I say, the valuations are really high, but I think a pullback is going to be a buying opportunity. This is a very changed and restored company. So Stratasys up some 8% on the week. It's not the patterns in there aren't as clear as they are in here, which simply calls for some additional rise, a pullback into October, and then another rise again. So this really looks to us like investors have a whole different perspective on this group. And I would say that maybe that's the same thing that you should do, is take a whole different look at it. Yelp is one that I really thought was in trouble this year. In fact, as you can see, it appears on our list for the riskiest for the year. That would be a stock that we would expect would be down on the year, and based on our analysis, and you could see that it was having a lot of trouble, and up until this week it was down on the year. But look at this bar, this massive upside 30% move that we're getting in here, a near 30% move. And you could see this range that we had in here, an expectation. But you see this bar, it's the first one up of the new cyclical pattern. You don't get peaks in this case. You can see that the projection is up here to $54 in Yelp, and it might even do better than that. So were there to be a pullback in here, we would buy it. It really looks like this is a huge pattern. Their ads were stronger, and we were forced to upgrade our targets in here based on a very repaired pattern that we have in here. This do you buy a stock when it's up 30% in the week? Well, probably not, but there's probably going to be an opportunity in here. We're going to take a look at Kors, K-O-R-S. This stock did well. I mean, it got pumped up again in here. Here's a target zone at that 161.8% at $78. We kind of think it's going to have a corrective process in here into October and then move up again. Overall, you could see as it moves through these highs that it really has become a bullish stock. These are called bullish configurations in here, where you see this advancing pattern right there. You could see it in here and in here. Those were things that were positive and telling you the stock had higher to go. So momentum established itself on the upside, and the stock, outside of modest corrections, we think has got some time to go. The retail group really has gotten better looking right now. We kind of get a sense that based on the patterns all being in synchronicity, in other words, they look alike, there's some corrective processes coming out there. We had A&F and Urban up about 9% on the week. We had Dillard's and American Eagle Outfitter up about 6% on the week. My notes are right over here. Can you see that? And one that I want to show you in here that had gains on the week was CVS. And I think that CVS is telling a bit of a story in here also, that I think as as an investor you might want to hear. So CVS up on the week, and take a look at what I think is a magnificent opportunity, a great pattern right in there, as the stock has been in a downward trend. Now, how do I establish a downward trend? It's in negatively configured patterns. In other words, there's a low here and a low here and a low here. You see that? And these are lower lows and lower lows, but look at the higher high right in here. And a massive diamond formation being formed right in here. That looks to me like a diamond bottom. And see that first bar up here? Well, they reported earnings. They were really good. See that fib target zone right up there between 73.5 and 76.5? Well, to me, that is a very high probability. It failed in that resistance zone after a negative pattern, but it should get through that after a positive pattern. Stock trading at 68.5 right now. I think there is a good potential chance for the next week getting it up 5, 6, 7, 8% more in here, and a good base. You see that note right there? Bullish base completed. That really looks like a very positive pattern to me when you look at that. So I talked about Tesla earlier on, and I want to talk about it some more. Here's a stock that managed to get some gains on the week, maybe about 2% up on the week right now. But look at that giant shooting star right in there. Musk says that the financing is in place for a $420 effort to take it private, and supposedly there's meetings going to go on this week by the board to discuss that. Investors are simply saying, show me the money, as they squash the shorts in here as the stock ticked all the way up to 187 and then had that pullback in there. Here's your support zone in here, down to about 136, 148 to 136. We kind of think it could pop around in there. If the board comes out and says, well, this was a bunch of hooey, the stock is probably going to plunge about 50 points from here. And what we're looking at here is a I would say a very narcissistic Elon Musk, who just does not want to be accountable to the short term. His tweet was outrageous. Historically, when you do something like this, you halt the stock. You've got financing in place. It's going to be taken private. You don't drive the stock up that way. It's amateurish. It's amateur game for somebody like Elon Musk to do that. And I think that the SEC should really be looking at that and coming down on that type of action when somebody does that and puts out tweets that way. It's just really, really weak and amateurish to do something like that. And then there's one more thing that I want to make a point of, and that is that he says that he wants the investors to stay in the stock. Of course, he would have to finance less. The stock would have a net worth of $70 billion at 420, and he doesn't want to come up with all that money. So he says to the investors, "Come on in, stay in there. We won't worry about it." But the rules are that if you have 2,000 investors or more, you've got to treat it like a public company. So does he even know what he's talking about? Because he'll still have to be accountable. He'll still have to give reports. I don't get it, other than it's just out plain amateurish to do something like that. He's better take it private, because if not, he's going to have lawsuits, and if not, the stock is headed lower because he's got all kinds of execution issues, and maybe he's got a long-term perspective, but investors are not going to allow action like this, and they're going to be bailing if this 420 buyout doesn't come. So that's what I have to say about that. That is the best for the week, and I'll be right back and talk about the worst stocks for the week. All right, for the worst stocks for the week, we're going to look at a stock right now that was one of the best for the week last week. Sometimes, when I talk about valuations in a stock and that the rally in something just isn't justified by the valuations, even then I'm surprised by how a stock can give it up after that. And we had that happen in GoPro this week. I made a point that there was a resistance area that was also a target zone, and I thought the stock could get up in the 7s when you look at that right up over here. But look at this big downturn here. The stock loses over 12% on the week after that big gain. If it gets underneath this level right over here, 560, goodbye. It needs to recover right now, or this is going to be setting up a very bad pattern. See, this upward trend that I have in here is essentially going to be different than that. It's going to then look like this, and that would be a shame if that happened. It's really not good performance reversing that. So I talked about China earlier in the show. I want to talk about some of these Chinese stocks. The two that are the stocks that are ADRs that I follow. One of them is Baidu. This is such ugliness when I look at that. You could see, I'm going to show you right in here, these upward patterns that caused this big rally. And I want to give kudos to Costas, who's one of my members and highest level member, and is very active on studying cycle analysis. So he sent me this back some weeks ago, and he's gone through our workshop a number of times. And, I think he's spot on when I look at this. So there was a low due right over here in July, and you could see it came right over here, and the rally came as expected, but then it broke that, and now the decline looks, according to Costas analysis, down to late November. We're going to just respect this cycle breakdown that we see in here and say, wow, doesn't that line up with exactly what I showed you in the beginning of the show in China? Exactly the same pattern in there, breakdown, and pointing to the same timing of those declines out into November. That should give you a little sense that maybe that negative influence is going to be there for the U.S. market. Here is BABA, not looking as bad or steeply falling, but that also has a cycle violation, and that also points to a decline out into November. So that is a bad chart when you look at that. Baidu down about 7% in the week. BABA down only about 1% on the week. So not too much trouble when you see the amount of declines, but man, this setup is such ugliness, and I think it lines up really with China. Steel stocks, they had a bad week as these tariffs are really pointing the economic slowdown. So initially there was thought that they would benefit from the tariffs, but now we've had this really poor pattern come in. And this red zone that you can see right over here points to the breakdown that we had in here. This is a stock that has our colored phasing in it. The green phases are rising phases, the yellow are corrective. And when you get a red phase, it means that something has configured negatively, and that means that it sets up some bad patterns. And you can see in here we're projecting declining for a few more weeks, rallying, and then declining to lower lows. So that's not good when we look at that, and overall these steel stocks are not looking great. Let's take a look at Schnitzer, SCHN, in the same group, and this is the same type of a pattern where it looks like it's going to fall a few more weeks, get a rally, and then come down again. So that's our cyclical projection when we see that. Schnitzer down 6% on the week, and overall this is looking like they're going to be in trouble maybe through the end of the year or later, based on what we're seeing for these patterns in the steel stocks. So I mentioned earlier in the show that we do videos for our members, and this last Thursday we did I think a very informative video where we I took a broad look at the energy sector. I looked at oil, I looked at the XLE, and I looked at 23 energy stocks. Did some pretty deep analysis in there, and there's, in my opinion, some good opportunities showing. So you're going to want to watch that video that we did last Thursday if you haven't seen it yet. I bring that up now because we're going to look at one of the stocks that are in there, Occidental Petroleum, Oxy. They came out with their earnings report this week, and their earnings missed. The pattern that we're looking at in here looks to us like it has, in our opinion, a pretty good opportunity, and that it will then be rising again very soon. And a lot of the energy stocks look like, well, there is an opportunity in here. And you can see that, well, the lows are projected right around over here. See the 50% fib, see the 34-week moving average coming up that's off in support. There's about a week or two potentially of more pullback in here, but we think oil is groping for at least a temporary bottom, and this stock looks to us like it can have a pretty good upside move. So I really want you to watch that on the energy sector. We think there's an opportunity here for swing traders, and you can see by the projection we have in here by some idea of what sense it is. You're going to want to see, as we look at the major integrated oils, the refiners, the drillers, the natural gas stocks, and even a couple solar stocks, which are the best stocks to trade for what we think is a potential trade coming up here for the next 4 to 6 weeks. So don't miss that. Oxy earnings come out. Stock's down about 5% on the week, but we think that, as you can see our projection, that it does give an opportunity. Another stock that had a big move this week to the downside was Seagate. You can see in there a big head and shoulders top, the head and shoulders measurement coming down here to about 48. This is the kind of work that we do. We show where the support zones are. We show these patterns. And this decline over here looks like it goes to late September. So would not buy this stock now. If it rallied, I think it's a short. And the Seagate moves down. As Goldman Sachs says, it's a sell, and we had to lower our targets on it even more because it does look like a sell. One more stock that had no news that has been acting really well, and now we think it's made a top. See this target zone right up over here that we had in there? Gets up into that fib target zone. It's had these nice bullish patterns forming in here, as you can see, but I think now the top has come into place. See the evening star right over here? That made the same type of a look and made the top in that cycle. We think it's done the same thing in here. So if you've been enjoying the ride in CLIF, CLF, which is down about 5% on the week right now, we think that ride is over, and that there is probably a good reason to, if you're long the stock, to lighten up right now. Maybe even consider the short side in that one. We think that is about the upside that it's going to get. That's it for the best and worst stocks for the week, and I'll be right back with the short-term view for the coming week. All right, short-term view for the coming week. We're going to look at 5 different markets in here. We're looking only at the daily patterns because that's the short term. Make sure that you follow me on Twitter at askSlim. Subscribe to our YouTube channel. Give me a thumbs up if you like this video. That always helps us with our rankings on YouTube, so that's important to us. And please go to our membership pages. You'll see in there that we have 3 premium levels in there. Level 2, which is all of our videos. Level 3, which is our rankings and trade setups on the 80 best traded stocks, indexes, and futures that we put out trade setups during the week. And you can see rankings on multiple time frames on that. And level 4, you can have those charts, all of the work that we do on your Thinkorswim platform. So that is, I think, an amazing offering, and all of those available if you write me slim@askSlim.com. If you're a first-time member or you're upgrading to try one of those, I'll send you a month for half price, and then you can really get a good sense of what all this is. And don't forget, check out our workshops also, the 5 essential building blocks to successful trading. Just an incredible view of all that I've learned in 44 years and how you can implement that. It has really a psychological overlay to the whole thing, but I look at, there's a video on there and you can see it. I look at so many different aspects of how to improve your trading and look at things in a personal way. So That's amazing. And of course, our 20 video module cycle analysis workshops. You can look at those also. I also offer coaching for individual traders and consulting for funds and hedge fund managers. So a lot of things that I do, and our team is growing to handle all of this, and a lot of other amazing things coming. So please go look at all those things on our site. And for level 2, 3, and 4, you can have a half price. 1 month on that to try it out. Slim at askSlim.com. You want to try our stock index report? That's on there also. Amazing stuff coming on that. And if you want a free sample on that one, just write Matt at askSlim.com and he'll send you that. So lots and lots of stuff there. All right, let's get into the short-term view. How did I do the last week? I was about 70% accurate when it comes to price and time and pattern. That's really what we look at. And the previous week was about 90%, so we've been spot on. And our setups have been incredible also, really high percentage of good setups recently. So we're really in the groove at the moment. And we get out of the groove. You see that happens to us, of course. Well, that's the nature of trading. Let's take a look as we look at these 5 different markets. We're going to start out in light crude, and I'll tell you what I thought, and I'll tell you what I think as we move forward into each of these individual markets. So if you remember, we were looking for a decline. I've been telling our members that there was an opportunity in this yellow zone for a pullback, and we got that. And part of what I said in that video we did last Thursday was that it seemed like for the short term this period was ending right over there of decline. And you can see how nicely that worked, the nesting down over here where we thought it was going to decline into. And if you're hearing some pounding, it's because they're doing some work in our building where the studio is right now. So every once in a while we get hammered. Take a look here at that upward turn that you see right in here. So this was really good. It came down as we expected. We thought it would test the lows in here and then turn up. That was great. Momentum in there has been weak. You can see that, and it is still weak. So the upside for right now might be kind of limited in there. We're going to look for a move up to 68.80. Let's get a little closer look in here so that you can see. 68.80 is the top of this zone, the 61.8%. You can see our projection in here is to get up even a little bit higher than that over the next couple of weeks. But we're going to look for it to get up into this short-term resistance zone. The 50% line is at about 68.25. The 618 is about 68.80. That's really what we're looking for, with an outside up here at 69.30 in the next couple of weeks. We're going to call this an upside week, and the market still needs to do some work in there. So I sure hope they're done pounding there. So that is a look at light crude. The next thing we're going to look at here is the dollar /DXY. Of course, the dollar getting a flight to safety in here. And that is moving it up. In last week, we said that in 2 weeks, that last week it was going to move up to 95.66 or higher and take out that high. And you could see that. It was really nice. We thought that the euro currency would break down. Now, note the dollar momentum turning up right in here. And note /6E, the momentum in the euro currency as we called for that breakdown under that VTL. You see that VTL right there, saying that that would be a bearish break, and you see that, and it comes down and hits that target right there. So we're looking for more downside in the euro, negative momentum established in there, and more upside in the dollar. The moves we think will be smaller this week. Small down in the euro because it gave up so much, and small up in the dollar. Now, the dollar, we're still looking for this fib extension here in the next couple of weeks. That's around 97 now. As I said still, but actually we've raised that target up to about 97 in the next couple of weeks. That really does not point a good picture for the metals markets when you see that. It's just the dollar is the flight to safety right now. I've been talking about the yen being a bigger flight to safety. In other words, that we thought the yen would outperform the dollar, and we really see that looks like it's starting to happen in there. So keep a focus on the yen as maybe the best of the longs versus the dollar. The other ones we don't like at all. In fact, the dollar versus the Canadian dollar really looks good to us. So that is a look at the dollar, and if you want to see that analysis on the currencies, we do that in Future Speak every single week. Really a deep look at the currencies, and people that see us do that really comment on it. They love it. Here's the gold market. Now, what we had looked for was a bear market bounce starting in here. We said it would be a small up week. Well, it's down like $2 or a little bit less than that right now, and that is you could see the negative momentum that has been knocking this down all the way from 1,300 down to close to 1,200, and that knocking. And speaking of knocking down, I want to knock down that guy that's pounding up there right now. The supports, these target zones right in here. So here's a very feeble bear market bounce. We're going to look for a better bounce in here and getting up to this resistance zone. We thought it would get up to 1236 last week. It got up to 1227. So it didn't quite make the move that we thought. We thought it would be a small up week. We're really now moving this into the next week, really looking for the same thing, a small up week getting up to that 1236 area in what is really a bear market bounce against some very negative momentum. Now, the bond market got better in here, and the bond market did that, of course, as worldwide turmoil sets in based on Turkey and Russia, and the potential for that bleeding over into the U.S. banking sector. So this really accelerated to the upside. The 10 years are above this resistance level right now already. We think that this is our sell zone right up over here. It got through the lower portion of the resistance level, and the peak of this is about 144.22. Then there's this number up here at about 145.12. We don't think it's going to get up there, and we still have this as a sell zone as the highest probability. But we were talking about it getting down to 141 before. But based on this move, we've had to raise our supports, and now we're more looking for a dip down into this area over here. That would be getting it down to, 142.26 is the bottom of it right over here. The middle of it is around 143.02, 43.03. So that's really what we're looking for, is it to come back down in here and then turn up again, as you could see that projection. So that is looking like still a sell to us. But if we get a real big issue and we get the collapse in Turkey continuing, or it gets worse in Russia, then the buyers are going to keep coming in here. What I'm thinking is the highest probability is that Turkey raises their interest rates to some phenomenally high level. That gets the lira screaming to the upside, and then you get a pullback in here. And I think that's the highest probability, but this definitely shows a lot more strength. And we definitely do not believe that the bear market resumption in the bonds is coming for some months. We all along have thought that, well, we might get a bond pullback, but then we think that the bonds are going to rally again, and all of that being a bear market bounce in the bond market that we've been in now for some 3 months, and we think we probably still have another couple months of that out there as far as the bond market goes. So we're going to look for the bonds to pull back in here, and definitely they look better than they did before, as there is some panic situation going on. And while we were doing this show just now, the stock market took another leg to the downside, so that helped boost the bonds a little bit higher. Let's look at the stock market now. The S&P 500, as we had expected that it would run into resistance around the 2843 number. It got higher than that, and then it made an island, and an island is not a good thing. It did the same thing on the Dow Jones Industrial Average, and that was very meaningful. I think I'll show you that in a moment. So you could see this island right up over here. You had the gap up and then the gap down. It's moving into minor support zones. Now, if the market is able to stabilize temporarily, and that's what we think is going to happen in the next week, that we think we're going to get a small down week for the week, that it will kind of chop around in here, but the risks are going to pick up later on in the next few weeks, and the risks are really high right around mid-September. So we think we're in a choppy period in here, and then the risks picking up in the fall. This right now, we're talking about the next week. You could see this support right over here around, it's 28.21 is really where that is. You could see the slim ribbon right there, still pointing to the upside. Now, we're getting some internals that are changing and some weakening that's going on in the shorter term things, the intraday patterns. But we're still thinking that this is in okay shape and is going to hold this level. We're calling for a small down week this week. Now, last week we talked about the NASDAQ momentum, which was breaking down. It's improved. And the Russell momentum was negative, and now it's a little bit better. But this is an important level here, 28, 21, 22, something like that. If it accelerates down below that and starts threatening this level down over here at 27.98, then the risky time period I'm looking for in September is moving closer. And that would say that there's a lot of risk coming into the market. So as long as we're holding up in this area and we're holding the positive momentum, then I'm going to be looking for just a small down week this week. If it does break that and start threatening this area down over here, right around the 27.98 area, then it's telling you that there's a lot of trouble and contagion is here, that sinkhole I talked about is starting to pull the U.S. market in, and that there will then be a lot of trouble. These are very important short-term key levels that give you some important messages. I want to show you the Dow. I don't normally do this, but I want you to note in here the similarity. You see the island here and the island here. Those are, one of them made a very important top, and then you got a big decline in the Dow. And now you're threatening this low already right over there. Well, that's what I warned you about in the S&P 500. This right over here is telling you that there is potential risk. And you can see the upside momentum. We're going to watch for the Dow momentum to disappear. And that island right over there, and that inside down pattern that's called, is really telling you that there could be some trouble in here. So we really want to make a point that we have those support zones laid out. We think the market's still going to be down a little bit. However, as you see the potential for bigger breakdowns in these lower prices, those are things that you have to believe, because the market will be speaking to you based on this, and it will say that there is trouble. For the moment, we're getting declines on breadth that is not that bad, and it's getting helped out by the Russell not able to move to the downside yet. So we're looking at some conflicting information, and that's with upside momentum still intact. We're going to respect that and say declines will be modest, but we're going to watch for that to change, and that there could be some significant breakdowns in there. So that's it. I've showed you everything. I hope there was some great information for you. I hope you've been taking advantage of some of these really nice pieces of analysis that we've done over these recent weeks, and it's benefited you. And we also hope that you go to our site at askSlim.com and look at all those things that I just suggested to you earlier on at the beginning of this segment. And if you have any questions, just write me, slim at askSlim.com. I want you to be so careful because it is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm going to do a steady show.